Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. Alongside with me is Cameron May in the chat. We welcome him and we welcome all of you on this July 16th. We got Sandy, Kevin, Richard, Lena, WW or Will, Grace or GH, Ocean Life, and JP or Josh Pink. We welcome all of you. Just real quick as we get started, remember Cameron May and myself, we do post educational content on X. Feel free to follow us there. Cameron will post his handle in the chat, and we also do post educational updates as well as far as announcements. Now, just real quick as we just hop right in, got a lot of things to talk about. Speaking of trading growth and value, and what we'll do is remember the information we talk about here is provided for general informational purposes only. Should not be considered an individualized recommendation. Schwab does not recommend the use of technical analysis as a sole means of research. Fundamental analysis, macro analysis, intermarket analysis, those can be complementary to what you're seeing on the charts and also can kind of give a little bit more of a kind of a 360-degree view of what's really happening or why is the chart going up and down. Now also remember when we talk about the paper money account, there'll be the software-based version. When we talk about risk with dividend paying stocks, those could be, they could reduce or stop paying dividends. So understand it's not like a fixed income product or something like that. Can stop or reduce, etc. on a dividend paying stock. So be aware of that. That's why you probably really want to watch the earnings and are those earnings continuing to grow to pay the dividend? And also how well is the company doing financially? Now also remember that investing in stocks involves risk. And then today what we're going to do is we're going to talk about I want to kind of talk about Trade Desk that was going to be added to the S&P 500. I want to talk about how that relates to Coin and also Hood, okay? Now, also with that is I also want to go back to kind of what's driving a lot of these trades, whether it's stocks or options related, derivatives related. I will take a look at the company Cboe here today as well. Now, with that said, as we talk about some of these growth names as examples in the paper money account, okay, I also want to take a look at SO Southern, which is kind of more of the income, maybe value potential trade. We're going to pull that up as well, which has kind of been setting up for a while as well. So let's go ahead, and I also want to kind of throw out a trade where we show the example of selling at resistance only to see the stock push even a little bit higher. Could we actually be showing a re-entry here today on Caterpillar? Okay. Now, just real quick as we get going here, let's pull this up. So first off, I just kind of want to show something just briefly. Okay. I have a list of the Dow Jones stocks. And what you're now going to notice is if we look at the Dow Jones stocks, you're going to see that there are a couple of those stocks that are in trend 5. Trend 5 just tells us, hey, the price is below the 10-period moving average, but still above the 30. So remember, whenever we see that purple, we're kind of thinking these are stocks that have lost momentum. They have trend, but they're flagging back deeper, okay? Now, yesterday I put out there on X, I put out there a video. And that video looked like as follows. And what you're now going to notice is this video right here when we talk about these trend color candlesticks, okay? And if you take a look at this, that is important. Make sure you actually watch that. Let me actually send this out to you. If you didn't see that, make sure you watch that. Now, the significance of that is when we actually pull this back up, the investor is trying to see just orange color candlesticks, shallow pullbacks. Sometimes those pullbacks are a little bit more severe, purple. Now, deeper pullbacks, look at how many stocks in the Dow, okay, here come the bears. How many stocks in the Dow are below both moving averages? So this is not just momentum now. Now we actually have to kind of say, is the trend broken? Now, if you looked at stocks like CRM, you looked at stocks like Coca-Cola, you look at stocks like PG, I'll just pull up the top 3. And if we looked at those and said, why don't we talk about stocks in trend 1? Because they're not trending? Is that a stock that the investor would say, yeah, look at the entry set up there? Where? Now, if you said, well, let me see Coca-Cola, I bet that's the entry setup. The only time that trend one would be more of an entry setup would be if it's pulling back down to support, horizontal or diagonal, and you'd like to see a bullish MACD divergence to complement that trend number one, which means price below both moving averages. So strike out on Coca-Cola as well. And if we come up to give me the next batter, and if we take a look at PG and trend one, and what do we notice here? Does that look like an uptrend to you? Now remember, I didn't cherry pick these. We just picked the top three. And what we're going to notice is that's why we don't talk a lot about trend ones, is because we're looking for something that's already moving. Now, a lot of times people say, well, I like to get in trend ones. And I'll say back, well, name the last 5 that you got in, or even the last 3. Now, I'm just kind of thinking about it. Well, thinking about it and doing something totally different. Okay, so one of the first things we learn in markets is you're trying to ride a trend. You're trying to ride momentum, at least something that's above support. Trend ones are not above support. They've been broken down price-wise. Now, what I want to do is let's take a quick look at the SPX, excuse me. And if we look at the SPX, it's kind of been an interesting day here today. The White House, there was rumors that the Fed Jerome Powell would be pushed out. Market sold off a little bit, okay? And it's pushed back. Now, for about the last 4 sessions, we've been talking about a strategy, maybe neutral to bullish. And if you kind of take a look at what the market has done, it's been just painting sideways. Now, that doesn't mean everything is sideways, because that is not true. So you got to remember, if the SPX is going sideways, something is going up, something is going sideways, something's going down that's causing it to offset neutral, typically. Now, if we pulled up the NASDAQ, we'll look at these two. The NASDAQ kind of being a little stronger here today. And I'm starting to see, are you starting to see this? Let me say it like this. What do you see on the NASDAQ that is noteworthy? Well, I mean, if you ask me that, I'd kind of say, kind of seems like we're seeing a lot of lower shadows. Now, these lower shadows are in the ballpark of the Fibonacci level, which was the 161 extension. And we've seen this 1 bounce, 2 bounce, 3, 4, 5, 6, 7, okay, maybe 10's the charm. So all of a sudden we get above this 161 extension on the NASDAQ, and 7 times buyers have been stepping back in. So some of these tech stocks, which I want to talk about now, some of them are actually being purchased. Now, let me ask you a quick question. Which ones are being purchased? Okay. Now, let's kind of turn our discussion to a stock that was going to be added or announced to be added to the S&P 500. Okay. Now, let me ask you also another question here. Why is being added to the S&P 500, why is that important? Why does it matter? Okay, does it matter? Now, on July 18th, okay, Trade Desk will officially join the S&P 500. It's going to take the place of ANSS, and that's ANSYS Inc. Okay, so July 18th. Now, the one thing, so that was announced yesterday, and I want to kind of go to this chart, and then we're going to talk about Trade Desk, and I want to kind of make a comparison to Coin. I want to kind of take make a comparison to also Robinhood, and I want to kind of talk about this. Now, if we kind of saw the chart of this, what type of price pattern do we see on the chart? Now, as I'm getting some of your answers, one of the reasons why being added to the S&P is kind of important is you kind of get more visibility. There could be more analysts that are starting to cover the company itself, maybe as far as a potential interest. If we're talking about maybe the S&P 500, you might get a weighting to the S&P 500 where all of a sudden portfolio managers are adding stocks to the portfolio, to something, a new company to add to, and so on. But it's probably the biggest thing is visibility and liquidity, okay? Now, if we kind of said, what type of price pattern do we have? We'd probably say this kind of looks like a little cup and handle here, okay? A little drop down, a little run up, a little shallower pull back up. You could even say on this like a tilted up W, okay? And if you kind of notice that, right, we're kind of at that area of resistance right now. And I want to kind of go back and kind of look at the fundamentals for just a moment. Now, what we're going to do is we're going to go to the Analyze tab, okay? We go to the Analyze tab, and if we scroll down, what we're going to do is we're going to look at some of these numbers. Now, if you said, I don't even know what Trade Desk does. Well, if we take a look at this, they do cloud-based ad buying platform, okay? So the biggest thing that kind of stands out is cloud-based ad buying, okay? So that cloud has been big, okay? And if we also take a look at this, you're going to see that it's actually out of Ventura, California. Now, when we look at kind of some of the numbers, and we'll look at the share values first, sales per share, that has kind of been ticking up over time, a little stair-stepping up, okay? Now, a lot of people like to say, look, I like to kind of see a company that's been growing continually over time. Now, sometimes the company can kind of get to a rough patch where maybe their last product or maybe the sales started to drop, etc., or they were trying to bring a product or service to the market and it just took longer and it costed them more. Well, what you're now going to notice is when we look at the sales, the top of the income statement, we look at the bottom, the earnings, you're going to see that the earnings per share as the earnings per share went up, as the revenue share went up, the earnings per share went down. So there was cost associated with that growth. Now, in 23, we went from 11 cents to 36 cents. We went from 36 cents to say 78 cents. So this kind of has some underpinnings of maybe some growth to it, but then why did the stock go down, right? Well, we went to the quarterly numbers. You're going to see that these numbers, 17 cents, 19, 36, and then Q1 of 25, the lowest we had seen in the last 4 quarters, okay? Now, what I'm going to do in this example of Trade Desk, and we're talking about Hood and Coin, is if we look at, let's say, Trade Desk, we're going to try to buy some of this, just a position. And when we say buy a position, we know that the position size for the portfolio. So let me kind of show you the paper money portfolio. This is a paper money trade, okay? It's an example. Here's a list of some of the positions we have in terms of shares, and we do supposedly have a little cash that could be invested, okay? Now, kind of think about it. I mean, if the investor had capital, are there opportunities out there in the market? Well, if stocks are above support, there's bounces off support. If there's breakouts, the investor might say, I'm going to try to maybe use that capital to try to invest. Okay. Now, what I'm going to do is I'm going to go to the trade tab. I'm just going to type in just real quick, TTD, Trade Desk. I'm going to right click on the ask price, buy custom with OCO bracket. Now, this is kind of interesting from a fundamental point of view. It's interesting from a technical point of view. We talked about that. But it's also kind of interesting when we go back to that chart, TTD. It kind of looks like, could this be something that maybe tries to fill in the gap? Now, you know, if you listen to any of the classes that we talk about, a lot of times we talk about if a stock were to break an area of resistance, could it go to the next level of resistance? So when stocks actually break resistance, you can get bulls that are currently in the stock. They might try to add more. Second, you could get new investors buying. And third, you could have short sellers who are short the stock, exiting the stock because they don't want to lose more than they probably already have. Or maybe they're taking their profit. Now, what I'm going to do is we're going to buy just a half position. So when we look at this portfolio, if we said, look, I don't want any more than 5 to 8% of capital of the portfolio being in a position at one time, if I just took 109,500 or so, I'll just round up a little bit, and said, look, let's say we took a position of 6%. $6,500 is 6% of the current portfolio value. What we're going to do is we're going to take half that, like $3,250, okay? And we're going to try to put on a position and then try to add to Trade Desk if it starts to reverse. Now, what I'm going to do is when we bring this back up, we're going to pull it up. I'm going to click on the pool balls, percent, dollar amount, type in 3250. This is just saying we're going to buy $3,250 of TTD. Now, right above the dollar sign, you're going to see like a little red icon. If I click on that, it's going to tell us there's 6 shares. Now, please, I've said, please don't laugh. Because a lot of times when you think you buy 6 shares, there's no way you can make anything or lose anything. And that's not true. Example given, if you look at Coin, for example, 9 shares of stock up 442. You look at Hood, 33 shares of stock up 192. You look at something like Oracle, 28 shares up 358. You look at Raytheon, 40 shares of stock, 130, and these are not been bought last year. Okay, now they could be down this much. So a lot of times we kind of we don't understand that if it's a little bit bigger dollar stock, let's say $100 plus ish or more, they move more. Okay, now what I'm going to do is about 39 shares of stock. I'm just going to type in 39 shares of stock. Okay, so what I'm now going to do is type in 39 shares of stock, and I'm going to put a target kind of in the middle of this gap area. So that gap area, if I redraw it, it's probably, if I said, where's the middle of it? Probably right about $98 or so. Now, James, are we saying that it can't go up to the top of the channel? Frankly, I don't know. I don't even know if it's going to get up to 98. Okay? But what we're going to do is we're going to put that target right at $98 at the midsection of that. Okay? Limit, day to GTC. Now, the stop underneath, if we take a look at this, where's the potential stop? When we go back to kind of the support area, there's really kind of been more of an upward trend to this. And so we can kind of see some touches. Most of the touches have been right around 75, and then the recent gap up to 80. Now, why not set the stop below 80? It's a really tight stop loss, okay? Some investors like to set stops a little looser initially to try to see if that trade can get off the ground and move to the upside. If that stock actually starts to bounce, okay, if it does, then they can move up their stop as that support level of 80 has been tested. If I set up the initial stop at 73.50, come back to this, 73.50. Trade number 1 that we're doing here today is we're going to buy half of a position in the IRA, or try to, and then put a target at 98 and a stop at 73.50. Okay? Now, I'm kind of thinking about like, wow, if Trade Desk actually got on the S&P 500, could there be another company that's been shooting to the upside that could be added to? Now, I'm not saying it's going to. Some investors might think, well, geez, is Hood on the S&P 500? Okay? I don't know. I mean, let me ask you a question. Is Hood currently on the S&P 500? We don't know if it's going to be added to the S&P 500, but some investors might say, wow, if you get a stock hitting brand new highs, hitting brand new highs, hitting brand new highs, and growing fundamentally, could that be one of the stocks that might take the place of another company struggling? We are not. I am not saying that Hood is going to be on there. So if someone says, oh, you said that, we can ask a simple question. Question is not against rules, okay? So what I'm going to do is I'm going to go confirm and send, and then what we actually have is a stop. Remember how that works. If it goes to that price or less, it then sells at that price. The key word is or lower. The stop is a market order. It's not saying it's selling it exactly at 73.50. That's the risk to a stop. Now, what I'm going to go ahead and do is send that order. Now, James, what about the other half position? What I'm going to do is I'm going to kind of put I'm going to put an alert. Now, how many of you like to set an alert? How many of you actually say, I don't really set an alert? Why would I set the alert versus, let's say, like a buy stop? Well, an alert is just like, someone coming into your door and you hear ding, ding, ding on your phone or in your house or whatever. It's an alarm, okay? The alarm is not an entry to get in. Now, what I'm going to do is I'm going to right-click right there, and I'm just kind of going a little bit higher above where we are. If this goes up tomorrow, create the alert. We're going to say, look, wherever we right-clicked on the chart, I right-clicked at 83.12. If we get to that price or higher, let us know. And I'm going to kind of even put right here because sometimes we forget, okay? And we got stuff going on. 32.50 add. Why 32.50? This is the second half of the position. Okay, so the point, the practice we're trying to make is we're trying to pick a company that's stepping aboard the S&P 500. Could there starting to be a little bit more visibility into the company and coverage by analysts? And also, could there be an increase of liquidity? And maybe could that potentially lead to trend? Now, I'm going to create the order. There it is. Now, what I meant to say, not an order. We actually, we created, as we could say, it's an alert order, okay? But we're just saying the mark, which is the stock price, if it gets greater or equal to 83.12. Now, what I want to do is, are there any questions with what we covered so far? Okay. So the comment was with TDD, why not use a buy stop limit? Well, let's just do that real quick. And I'm going to do this fast. I'm going to right click. If you said, James, I'm not an alert person. I'm a buy stop limit person. Fine, let's do that. We can do it quick. Buy custom with OCO bracket. I'm going to do it at the exact same price. So I'm going to change the limit to a stop limit. And this is kind of what's fun about investing. It doesn't always have to take so long, okay? And if for example, given if, in the world of investing, if you had maybe 5, 8, 10, 12, 15 positions, it's possible to do more than one position, okay? And in terms of investing, when someone is seeing some entry setups, it's probably going to be more than one entry setup, okay? If we're talking about some stocks that are actually trending. So this order that JP is talking about, Josh Pink, is actually saying, look, if we get to that price or higher, get in. This limit price is just saying, look, do not get in any higher than 83.50. Now, the $500 question is going to come. Well, how do I know how far to put those apart? What if I put in 100? Look, it's pretty simple. The wider that you set those, the greater chance that the investor could get in. If I said 83.13, only a penny higher than that buy stop order, lesser chance to get in, okay? So the risk is, wonder if we gap to the upside above 83.13 and it never comes back down. Don't get in, okay? So a lot of times some investors will just say, look, I'm going to take it 50 cents. And this is not even really the answer all the time, because we could say 50 cents, but then what if I talk about a $1,000 stock or a $4,000 stock, like Berkshire Hathaway? So it's really, I like to think about it in terms of a percent to be fair. So if I said, hey, what's 1% of 83 cents? It's about 83.12. It's going to be about 83 cents. At 83 cents to the price, it's going to be about 83.95. Okay. Because if I said 20 cents, 50 cents, that's not the same really for every stock. 50 cents on a $40 stock is not the same as 50 cents on Berkshire Hathaway A shares, okay? So hopefully that's clear. That's why we kind of like to look at a percentage. Now, what I'm going to do is that target amount, which we just did, let's put that back there. Where's the target on that? $98, okay? Where's the stop on that? Let's put it back, $73.50. So if you said, James, I don't do alerts, I like to kind of have those triggered to go, I'm just going to put in, that's going to be $32.50. And what we're going to see is that $32.50, that's the capital that's available to buy at this price or higher, but no more than $83.95. Okay, dated GTC on the target, dated GTC. So we covered the entry, which is a half position, the add, we showed the alert. We also talked about, for example, well, wonder if you want to add to the position, do like a buy stop limit. There you go. Confirm send, hit it. Now, and I'll fix that. That's why I kind of said the IRA, you could have money there, but it could be tied up in other trades, and you know why. But I'll fix that. Now, the one thing I do want to bring up is I want to go back to just real quick, coin. We have been talking about kind of the effects of that other asset class impacting the company's fundamentals. Now, if you take a look at this, this is where our last support level is. Let's go over really to one of the charts we have. So this is kind of our standard chart, two different moving averages, the 10-day Hall moving average and the 20-period Hall moving average. Now, if I go forward here, okay, and by the way, I want to kind of give proper credit, okay? Yesterday, how many of you remember Ken Rose? Ken Rose and I, we talked about these moving averages quite a bit. We talked about the shading of it. Ken was the one kind of responsible for the whole moving averages. The whole moving averages came out years after, like an exponential, as kind of some new studies were updated over time. So I want to kind of give proper credit. Ken has been fishing so much, he's retired. He said, look, the fish need me. He could be watching here today, but I just want to give proper credit because it is a nice little chart here. Now, what I want to do is let's go to the second. Let's go to the what? And he says hello, and he does watch the webcast, and he enjoys it. He said so. It's good. It's good to hear he's doing well and the family. So what I want to do is I want to kind of go back to this day low. Okay, so we want to kind of just be organized, disciplined. Every day is not different. So what I'm going to do is this is where the stop was. And if we look at that, fourth chart in, we're going to right click on that and say, well, that's really the 8-day low. If you like to use tighter stops, we're going to grab that stop and we're going to move it up to the 8-day low right there. Now, that locks in the profit. That is foolish to say that. It doesn't lock in anything, okay? Because you're assuming that it's going to fill at 348.34. That's a trigger to sell. We do not know where that order is going to fill. Now, if we go back, what's going to happen is it's really going back to about last 8 days and saying which day is the lowest in the 8, and it's looking at the July 8th. And what you're now going to notice is that's why the line is right there. Okay. So on coin, the current position that's in the paper money portfolio, we bought those shares at 354 and change right there. It's at 403. When was it purchased? Well, those shares were purchased 2 weeks ago. Now, here's the deal. When you look at $444, you might say that's chump change. But then if you pulled your calculator out and said $444, if I were to take that back out of this account, this one position, these little 9 shares that you don't think is that much, that's what people kind of think. They say it like that. It's not really that much. Well, this one position, what that investor doesn't understand is 0.004 is 0.4%. In other words, it moved the paper money portfolio. That's a demonstration simulated trade. There's 4 disclosures right there. Okay. And what you're now going to see is that one 9-share position move that portfolio, paper money, simulated trading, right there. Okay, 6 times I said it. And hopefully that's good enough. And now what you're going to see is, wow, that was just on one trade. So every trade a lot of times can move the portfolio up or down. So that's why you want, when you put on positions, you want to say, is this something that the investor really thinks could potentially increase? Now, what I'm going to do is with actually coin, I'm not going to add to the position, but there is kind of the asset class we've been talking about. Could that continue to go to the upside? Now, you got to remember something. Investors are not foolish. We know that Coinbase is not selling soap. We know they're not selling detergent. We know they're not selling t-shirts, okay, shoes. What do? Well, we actually go to analyze, and they actually, for example, you're going to see that this will give us a rundown of really what they do. And we're kind of now starting to think, well, geez, if that asset class is going up, what might it do to the sales per share? Sales per share is like saying the same thing as revenue per share. Okay, what might it actually do to earnings per share? Why do I bring that up? Well, hello, the earnings is coming up on 7/31. So investors are watching what product they're actually selling access to, or multiple products, and saying if those products are going up, there could be actually an interest in the products to buy and sell those products that are creating commissions, or let's say interest, okay, etc., and new accounts, whatever. And if that actually happens, if it does, could they potentially benefit? Could, one, potentially, there's 2. So just one sentence, could they? We don't know. We're just wondering, okay? Now, I want to go back to one that we're going to do an example trade on. Now, I talked about, for example, Trade Desk, okay? We kind of talked about, geez, that was kind of interesting because you actually had that one actually go to the S&P 500. If we pulled up and say, James, I don't even know how you pull up the S&P 500. How do you do that? Well, if we go to the market watch just real quick, and let's just do this. Let's go to the S&P 500. Let's do it. And what I'm going to do is I'm just going to rank this I'm just going to rank this by A to Z. And we're going to scroll down, just like a good old phone book. Say, look, is Hood in the S&P 500? Well, if we look down here, do you see any Hood in here? I don't, okay? So Hood is not in the S&P 500. Now, kind of an interesting kind of maybe read would actually be Googling, what does it take to be on the S&P 500? What requirements are there? How might a company actually get delisted from an index? Kind of an interesting read, okay? Now, what I'm going to do is in the position, the paid money portfolio, excuse me, if I pull up that paid money portfolio, and let's go back to this for just a moment, just like we saw with coin, we have a stop, and that stop is right at 89.98. Again, we want to be organized. We want to be disciplined. Okay, this ain't about how you feel. Okay, I mean, what does that even mean? How do you feel? Okay, I've been sick for 3 weeks. What does it matter? Okay, keep going forward. Okay, now I want to go back to that fourth chart, and if I take a look at this, is this really an adjustment of stop? Well, that stop, we could maybe move it a little smidge, just a smidge. And what you're now going to notice if I did that, I just moved it up just a little bit. Now, if we could, this July 8th day, that's the low day. And then we have the 9th, which is almost as low. But boy, it would sure be nice if we can get another 3-4 days to where we can kind of maybe grind higher a little bit and move the stops underneath the date of the 11th. Or the date of, let's say, the 15th, okay? So if you said, James, I'm not 100% clear on what that line is showing me. Well, let me be clear. It's plotting the 8-day low over time so you can visually see how volatile the stock has been. That red line is really plotting the 10-day low over time so you can see how volatile the stock has been. And then the yellow line is really plotting the 20-day low over time so you can see how volatile. In other words, if you kind of said, hey, if I would have set a 20-day stop, a stop using a 20-day low, how many times would I have been stomped out? And this is what drives me just nuts, okay? What drives you nuts, Jim? Well, when you ask a trader, where would you have exited recently? Well, it depends. And that's really an English translation for I have no stinking clue, okay? And so these lines, really if someone said, I use an 8-day low, I use a 10-day low, and I'm visually going to go look on that chart and say, did we get down to any of those lines? Because if it did, the stock could have been triggered to be sold. So instead of saying language like, well, it depends, and I would have done this, it's using a practice for trading and or investing. A little bit more interesting than saying, well, it depends. What does that even mean? Okay. Now, what I'm going to do is we're going to add to the position. We're going to right click on this chart. No, wait. Hold on. Let's do this. Let's go back to the 3-year weekly. Oh, it's up too high. That's the thing. It's up too high. And if I went back, I would have got in right here because my rules say that when that moving average crosses over, that's when I'm going to get in, the investor says. And the investor never got in. Now, having a little fun with all of us here, and we've all been there. Now, what you're going to notice is the most fundamental thing is about these moving averages is that when there's a green shading on the moving average, that just is telling us, hey, the 10-period moving average is above the 30-period moving average. Excuse me, the 10 is above the 20-period moving average. And what you're now going to notice is there's momentum and there's trend. Now, as people, we love to make things really complicated. But sometimes it's just, you can make it really complicated, but it doesn't necessarily mean that you know any more than anyone else that is that trend going to continue, okay? Now, what I'm going to do is we're going to add to the position, even though some investors might say it's too high. Okay. And I lived in Kentucky and they would say it's too high. Okay. Now, Kentucky people, great people. Okay. Love those people. Okay. Now, what I'm going to do is we're going to add to the position. We're going to right click. We're going to go buy stop. Now, if we right click and buy stop, what that really means in this case is we're going to just buy the shares and we're just going to try to move up the stop over time. Now, here's what I want you to do. Every time you hear someone say it's too high, take a quarter out of your drawer and I want you to stack up the quarters over time. Now, what you're going to probably notice is over time is, wow, I got a lot of quarters on the table. And someone kept saying that over and over again. It's a visual reminder of trend. Okay. Now, what I'm going to do is I'm going to go back to the margin count for just a moment. And what we're going to do in that, if I did the same idea, if I did, let's say, no more than 10%. Now, why is that higher? Okay. Well, in a smaller dollar account, you might consider taking a little bit bigger percent. Why? Well, it's a smaller dollar account. If I say, hey, we're going to take 2,000, 6% of 34,000. If I say take 3,000 of 34,000, it's like 9%-ish. Okay. So little movements in dollar amounts of capital is a bigger percentage, hence a smaller dollar account. Now, what I'm going to do is I'm going to go to $2,500. Okay. $2,500. And that's going to be about 24 shares of stock. Now, I want to kind of tell you something, okay? I had an opportunity this next week to go on vacation. My wife, my daughter, grandkids, et cetera, they're going on vacation. Usually when I go on vacation, I just work anyway. For me, the stock market is therapy. And so it's going to be me and Jax and potentially my son if he doesn't go as well. So just a little fun with you. If you can kind of sense, we kind of like to talk about the markets. It's just interesting stuff. It really is. Okay. Now, what I'm going to do is I'm going to go back to this. So it's just going to be me and Jax here in the next week. So maybe we could have a special visitor. A little fun there. Now, what I'm going to do is if the investor said, James, I'm going to set the stop, let's say at 91.38 initially. Now, sometimes people can be so focused on where's that stop initially and how tight, I don't want to lose anything. The problem is if the investors don't want to lose anything, they set tighter stops, they get stopped out more frequently, they lose more and they lock in those losses. The opposite side of that is you say, look, I'm going to set looser stop losses and try to get the trade off the ground and try to get that 8-10 day low to move to the upside. It's your decision of really what you want to do. Well, in terms of my wife, she just says, well, when you come out with this, you just work anyway. And honestly, I enjoy it. Just part of my day. It doesn't, like if I taught something, I just enjoy it. Okay. I'm not really like a break person, really. And I got that from my dad and his mother. They were farmers. You don't take breaks when you're a farmer. Now, we take a look at this. We see that red order again. What is that telling? A red line there with the stop order. No guarantee the execution price. That execution price is what it fills at. The activation price, that term, is referring back to the stop loss. So we're going to try to add a little bit here. Now, something that I want to kind of look and see from a paper money example is if that stock actually keeps going up and up and up and up and up, I mean, this was at $14 last year, okay? And it literally went up eightfold-ish or so, whatever the percentage is. Does that maybe get added to anything? Now, we don't know. We have it on the radar in the paper money account as an example trade. Just going to watch and see what happens. We don't know what the future brings. That's why we actually come every day. Now, I want to also go back to just real quick a couple other stocks that are standing out, and then I want to go to your questions. The only thing I'm going to say on Palantir, the paper money trade example, that actually is a brand new close above the high of the low day. Where do we see that? Well, that green dot is sitting right on that dead moving average, okay? And it only went down for a day, and then it bounced right back to the upside. We went down for 2 days, and then it bounced back to the upside. Ladies and gentlemen, boys and girls, when that 10-day moving average is above the 20-period moving average in the shorter term, at that moment in time, there's momentum, okay? So very important here. Now, are we at the target yet? The answer is no. How close to the target might the investor get before they start really kind of moving the stops more aggressively, okay? Answer, we always talk about if we get within 1%, maybe 2%, and I'm going to kind of draw these. I'm taking resistance less 2%. Where is that? I kind of like to mark that, so if we kind of get up in that area, the investor might want to practice using what? Reward risk stop methodology. The 1-to-1, the 1 to 1.5 reward risk methodology. And so if we go up to, let's say, 155.62, which is 2% away from the target area, I'm going to just set an alert on this just in case. Now, here's the nice thing about something, okay? Technology is a wonderful thing. It doesn't always work. We know that. Technology is French, Latin for doesn't always work, okay? Now, the one nice thing is if we, for example, some of you are going to look that up and say, wait, I didn't get that translation. A joke, okay? Some of you, I got to watch you guys close, okay? Now, so the reason why I'm doing an alert is if we go to that price or higher, it could actually send a text to my phone. If it sends a text to my phone, it's going to send a text to my watch. So if I'm just at maybe a little local grocery store and I get ding, Palantir, enter above, ding, then all of a sudden I can go in and change that order, maybe just whatever. And so we're just trying to capture any of those potential gains. Now remember, with a stop, it's not saying we locked in anything. We don't know where the fill is going to be, okay? But that's another trade that we've actually kind of kept an eye on. Now, are there any questions that you have? So our focus here today is we talk about coin moving up the stop. We talked about adding to the position of Hood. We also talked about the position of TTD, kind of trading a little reversal trade. And then we also brought up the example of Palantir and kind of talking about visually kind of planning ahead of time that if that actually stock went up to that target area, where might the level be within 1 or 2% of that, where you could say, look, I already made a determination of where that level was, and if it goes there, I have an alert, and I'm organized, okay? Now, any questions? Oh, yeah, Bill. Bill says, meow, kitty cat. Now, yesterday, Bill never lets me forget, okay? Now, yesterday we talked about a trade example on kitty cat, and if we look at this, Caterpillar was up near an area of resistance yesterday, and it kind of like today fired back to the upside. And it went down for a day, and then it went doink back to the upside. Now, yesterday we had a trade where I believe, double check me, okay? I can't bring it up because it's not that type of class, but we could double check tomorrow. I think that was like a max gain type of strategy. But some investors, when you saw that move here today, some investors might say, James, I'm maybe going to do a stock position or try to see if that trade might continue to go to the upside. The one thing that we would say about Caterpillar that is abnormal, which is not a bad thing, is there is a pretty steep V pattern. And that V pattern is where we go down, and we're looking to see the duration of time in which it takes to go back to the upside. The significance, which people do not understand. I know I didn't. Probably took 15 years to finally understand what a V pattern was and why is it significant. There's a little saying that says when stocks go down, they take the elevator shaft down, they crash, and then when the stock goes back to the upside, it takes the stairs back up. But wonder if it took the elevator shaft down and the elevator shaft back to the upside. That actually kind of leads us to believe that maybe some of the information A lot of investors said, look, I don't think it's as bad as some other investors thought, and they buy into that steep sell-off. Now, if they're buying into that aggressive sell-off below support, they actually think they have enough ammunition of capital to push it back to the upside. I think that's really the risk to Caterpillar here is, could it even break above these prior highs? And I'm out of my time here today, okay? But keep an eye on Caterpillar. That's one that today, yes, did fire back to the upside. Now, I want to say thank you so much for your comments and your participation. You guys have been a real treat here today for myself and Cameron, and it's always fun to have a live class, okay? Now, we'll come back tomorrow at 1 p.m. Eastern on the trend trading class. Thanks to Cameron, and thanks to all of you. And also remember, stay tuned for Michael Fairborn's class coming up next. This has been the Trading the Growth and Value Stocks. Have a great day. Take care. Bye-bye.